Sorry about that. Amazing. So welcome to Crypto and Assets. These are calls that we're doing every single Saturday because we really believe that the weekend should not be your weekend. It should be where things really start for you. You get ahead, you have time to focus because a lot of people in this journey with crypto and investing, they don't have a lot of time throughout the week, maybe, right? You work, you have a family, you have a job. Now put a 7 in the chat, that's you, right? You don't have a crazy amount of time on the weekdays. You still have time because we all have time, is what you do with your time, but we're kind of busy. And the weekend, in my opinion, is where you can get ahead. And that's why myself and John Luke decided to do these calls on Saturdays, 11 a.m. Central, 9 a.m. PST, 1 p.m. Eastern. And the mission here is to educate, to give plays, but to also help with understanding what's really going on. So a little bit about me, guys. I've been in the game for 5+ years now. I first started learning crypto as a whole back in 2021. I saw the run under 20K in BTC to 60K. I saw the run of literally ETH at a couple $100 to, what it went 4 or 5K. I started to see that my first investment was actually ETH at $1,200. That was my first exposure in the markets. I was able to see cool things and other horizons, but I also had a lot of learning curves. It wasn't perfect. I had wins, I had losses. We learned a lot in this journey, and I'm really grateful because this is our second bull run. So we're coming with a lot of more education and a lot of exciting things with that. So what I want to do real quick is bring up my brother, John Luke, so he can kind of introduce himself real quick as my co-host here. Like I said, our vision is to continue pouring value on Saturdays and really giving you guys what I know can help you guys transform from understanding crypto to then maximizing it and taking that next step. So John Luke, brother, if you can come on here real quick, introduce yourself, and then we'll get going with what's going on in crypto.
Yeah, without a doubt, really excited to be on this call, guys. We are bringing weekly value about crypto, the current market, and what's going on. For those of you who don't know, I've been in the crypto space now for 4 years, started out in 2021. And I actually started out with stocks in 2020. So that was something which I was invested in, looking at blue chips, making 1 or 2 investments here and there. I remember diving into something called SPAC companies, called special purpose acquisition companies. And so it was a very volatile market, but that was my previous experience. And then diving into the decentralized space, not only entrepreneurship wise, but also from a corporate standpoint, I'm working on crypto bankruptcy. So it's kind of nice to get various perspectives. And I'll let Gil start off with the schedule for today.
Of course. So Familia, today, what we're going to be talking about is number one, what's going on in crypto. That's a segment that myself and John Luke actually really enjoy. I know the last call you guys had with John Luke, he went in deep with what's going on, breaking it down, not just talking about it, but also really explaining why it matters. And that's really, really important. And then we're going to be talking about crypto economics, really just how that kind of looks like, what the numbers look like, how to really understand these things, because crypto can just be a coin for people, but not realizing that it really is a technology and what's behind it is super key as well with the numbers. And then tokenomics 101, which is kind of the first part of crypto economics, is understanding what do you want to look for in the numbers. You guys know in traditional stocks, and again, on these calls, sometimes it will be crypto mostly, but it's also going to be other assets. That's what's called crypto and assets. But at the end of the day, you always want to look at the numbers. You always want to look at the back end, who's involved, and that's why tokenomics 101 is super, super key. And then we're going to talk about what's real versus hype. That's something that's very key because you have to understand that in these markets, there's thousands and thousands of coins. It's really kind of how there's thousands of businesses. But the thing is, in crypto, it's quicker and easier to make a coin. Anybody can really make one, but it comes down to the utility behind it, how it's being used, the longevity, and what's to come with it. And then we're going to end today's call with what to do with $1,000 in crypto. Now, family, I have a question for you guys. Put a 5 in the chat if you're somebody that says, you know what, I know what I'm looking at, but if I had $1,000 today, I don't know exactly what to do with it in crypto. I don't know what crypto to invest with. I don't know what percentage exactly to the T. I don't know how to structure myself. If you had $1,000 today, put a 5 in the chat if you wouldn't know exactly what to do. And that is okay, by the way. And if you do know exactly what you should be doing, I hope you're actually doing it, okay? Because people say, oh, I know exactly what to do. And then the bull run happens and we ask them, oh, what happened? Oh, well, I didn't really invest, whatever it is, right? So today's vision is to give you guys the explanation and the idea of really what to do with $1,000. Obviously, it doesn't have to be $1,000. It can be $100. It can be $50. It can be $25. It doesn't matter because everything is percentages at the end of the days, guys. So put a 7 in the chat here in the chat box on Zoom. If you're excited about these topics, if you believe these topics are going to help you in your journey to take yourself to that next level. All right. So we're going to go ahead and get started with the first segment, which is what's going on in crypto. I'm going to start this and my boy John Luke is going to end this. And the cool thing about everything here is that every single week we're going to update with what's going on from that 7-day period or a couple days, right? Now, the first thing, I don't know if you guys saw this, but Trump media plans 3 billion crypto investment. And it's something that was actually very talked about. So I'm going to go ahead and click on here because here on finance, Yahoo Finance, right? Literally Trump's company has a plan of $3 billion, which is wild, right? And it's the president right now, which is insane. So, it's crazy how the world is now. But just understanding, guys, that big money is here. This is something that just happened at the beginning of this past week on Monday, May 26th. And this is honestly insane to see. Obviously, I'm not really surprised, to be fair, but it's something that is something to look out to. Now, number 2, this one is a big one in my opinion. If you guys want to kind of see where to look at crypto things, I always look at Decrypt. You can always look at, things like Lincoln. Jean-Luc will probably talk about it. But here I saw this, and Circle, which is owner of USDC as of right now, freezes $58 million worth of USDC in Solana wallets tied to Libra scandal. So I don't know if you guys heard about Libra coin. Like, put a 1 in the chat if you heard about that, right? But Libra was a meme coin that actually the president Argentina was involved with, and he got in trouble for it. And I'm not showing that for that reason. What I'm showing is for this. They literally froze people's funds. One thing that I've learned from the education that we've always had access to is we've talked about how literally USDC is not decentralized. Realistically, no stable coin is truly decentralized, in my opinion, because there's always a big organization and entity behind it. So it's understanding that you got to be careful. You got to understand this. I used USDC when I heard stables, but at the same time, to be frank, if you want to be decentralized, and there's no way to be 100% decentralized in crypto, that's a topic for another day, but you really don't, nobody should want that because that means it will never be adopted. But just understanding that being in BTC, nobody can lock your wallets if you have it outside of exchanges. But USDC, guys, as a whole, is still a quote-unquote centralized asset because it's owned by a centralized entity, okay? So it's very important to look at this and say, okay, well, these things like this aren't happening. How can I get myself in position? And that's, hey, understanding what assets you're in and where you have them as well. But this is very interesting because this is going to be something that's going to be very normalized because guess what? Stable coins are going to be what's going to be used. It's not going to be Bitcoin. It's not going to be Ethereum. It's not going to be Solana. It's going to be stable coins. But there's obviously going to be regulation behind it and also some sort of decentralization, which is okay because guess what? That brings adoption, but it's also understanding on how to not be on like that side of the coin, okay? Now, the third thing I wanted to bring up on here is Pakistan, which is wild because my cousins, their dad is from Pakistan. So Pakistan launched strategic Bitcoin reserve. Now, guys, put a 5 in the chat if you guys have been seeing about the strategic reserves in different states. I'm going to bring one up here in a little bit, or even countries. This is something that's happening every single literally week at this point. And what does that mean? Basically, in simple terms, guys, they're literally, countries buy gold. If you guys don't know that, right? Countries buy gold to kind of hedge against inflation, or when things are going down, they have assets that are bringing up, right? So the biggest thing is that now there's countries like Pakistan adding a Bitcoin reserve. Okay, Bitcoin reserve to what they're already having, which is wild because that basically means you're going to be buying Bitcoin, okay? Which is a huge, huge topic. Now, I know John Luke wanted to add something, so bro, go ahead.
Yeah, so what a strategic Bitcoin reserve means is that it's a pot of funds, it's a stockpile of funds in times of crisis. So for unexpected events, such as, a natural disaster, such as a war that happens, it allows that country or that state to go into those pot of funds which has been growing to then fund resources or create new infrastructure for what's been destroyed, for example. And so in America, we have Arizona and New Hampshire are the first two states to have a strategic Bitcoin reserve implemented already. And then, for example, for New Hampshire, 5% of their public funds is allowed to be invested in that reserve over time. So, for example, people have gold reserves. There is a crude oil reserve for when oil gets really low, they can tap into that reserve. That's called the strategic petroleum reserve. And so if you had it in gold, that's okay because it's going to appreciate a little bit over time. But now they have it in Bitcoin, the appreciation is way larger than the reserves in other assets. So I think that's a key point to add to it.
Facts, 100%. And now to add to that list, Texas has passed their strategic reserve bill officially as of May 21st, guys. So now Texas is being involved. I know actually Florida as well is part of it as well, because I remember Max Terro talked about that as well. So just seeing that, just so you guys know, basically the US gave the opportunity to states to decide what they want to do and if they want to add strategic Bitcoin reserves. So that's a big one. I think that's like that amazing breakdown is basically being used when things are going south, right? And that's something that is huge because at the end of the day, it just brings liquidity, guys. It brings money in the markets, okay? It's just making it simple at the end of the day, right? So that's a big one as well. Now, there's something I like to add, put some nines in the chat. Actually, the Champions League finals today. So put a 9 in the chat if you watch football or soccer, however you want to call it, right? The proper way is definitely football. But literally, if you do watch the beautiful game, then not only today is the Champions League final, but PSG confirms that it holds BTC, guys. Literally one of the first clubs to actually hold BTC. Believe it or not, this is going to be normalized, just to be honest, because clubs are businesses at the end of the day. Okay, just want you guys to know that soccer is a business, football is a business, right? Basketball is a business, okay? So understanding this is honestly insane because it just brings more eyes to these markets, right? But this is huge. PSG, if you guys don't know this, is a huge, huge club in France, but like it's owned by people in like Saudi Arabia. I don't know if it's Saudi Arabia or Dubai, but one of those two. But there's a lot of money in PSG. That's why they can have like Messi and this player, and they can have whoever they want, to be honest with you, because they have the funds. So this is a major kind of cool little update on things. Now, also, last thing before I pass it to John for the last two is Bitcoin reaches an all-time high. Put a BTC in the chat if you saw that Bitcoin has officially reached a new all-time high. It hit higher highs. It's seeing movement, and it's wild because not many people are talking about it right now, but it's exciting times because we are only getting started, guys. There's not even regulation yet. Full adoption isn't here yet. A lot of things are still coming into place for things to go to that next level. But I'll have you, John Luke, brother, talk about the last two, and then we'll continue to go.
Yeah, so FTX was a crypto centralized exchange, which some of you guys may be aware. Hopefully didn't have funds in it. But when they went bankrupt in 2022, November, it's quite crazy when you look at the Bitcoin chart and you look at that period and you go, wow, like, well, a fundamental event had to happen to bring price lower in Bitcoin. And that event, as we know, news as the excuse was FTX going bankrupt. And that's an exchange that had $10 billion worth of assets. It was absolutely massive. And so now 2025, May 30th, they're now distributing some of those funds back to creditors. So that's another liquidity injection into the market. That's $5 billion worth going back to creditors, which many of them are then going to pump those funds back in the crypto market. So it's another catalyst to keep in mind. And also to think about this is that this isn't the only distribution that they're giving back to people who had accounts in FTX. There's going to be many more over the next 2 years. So that's just like consistent injection flow of funds going back in the market. This last point here, the SEC drops lawsuit against Binance. The SEC is the Security Exchange Commission. The same way how in England we have the FTC, Federal Trade Commission. It's all slightly different per country. And so they had a lawsuit against Binance, which is a centralized exchange run by somebody called CZ in China. And in 2023, they filed a lawsuit to say that he was defrauding investors, aka using funds for things that he's not allowed to use funds for, not tracking exactly where the money is going, things of that nature. And also investing the funds into risky assets. And so CZ, he had to pay $4.3 billion in fines for doing those things. However, the lawsuit's still going on. He served a 4-month prison sentence. But for some reason, whatever it is, they've dropped that lawsuit against Binance. So in terms of Binance going bankrupt, or in terms of them being more criminal charges, there are no more. So these are key things to understand in the market, because you might say, well, what does that fundamental news mean with me, or with Bitcoin, or with my funds? Well, number one, it's a reminder of security. You know, the fact that you should have the majority of funds in a cold storage wallet, which is not connected to the internet, or a hardware wallet like a Ledger or Trezor. And number two is that these news announcements often affect price. So if you're a trader in the market, you know, whether you're a scalper, intraday swing, or position, you need to keep these things in mind and understand the timing of when these things are happening, because that's probably going to affect the way you operate within the market. And even as a short-term investor, that's key to know as well. And also think about it this way. If there's lawsuits against Binance, then what about BUSD, which is the Binance USD stablecoin? Would there be an effect there, or on things within the certain chains that are associated with Binance? So that's why I want to consider it.
Facts, 100%, guys. So, guys, put a 3 in the chat if you guys got some game with what's going on in crypto. I hope you guys took some notes on kind of what's going on. Again, we're going to be doing this every single week to give you guys horizons of really what's happening. But like Jean-Luc said, it's important, right? Because if there's good news, there's bad news, but both at the end of the day, in my opinion, brings eyes and can bring adoption. And also you can see the transformation on where things are going. And right now, things are looking really, really good when it comes to the markets and what's really happening as well, guys. So we're going to go ahead and get started for the first kind of segment of today with what is crypto economics. Now, this is a point you can write down notes. I wouldn't recommend to write every single point down, but just point out the ones that you understand the most that you are going to be able to use, because crypto economics is so super important, because it helps you understand what to look for in a crypto. Yes, there is plays we're going to give at the end. Yes, there's certain things that you can just go on and do. But if you don't know how to navigate through it, or what's really going on in the back end, it's kind of like you don't really know what's really happening, right? And that's why most people in crypto don't really see massive success, or they make money and lose money and continue that cycle because they don't understand it. So crypto economics combines economics, which is basically the numbers, with cryptography to design and manage cryptocurrencies and blockchain systems. Now, the difference, again, between crypto and many other things, remember, it's a currency in a blockchain. It's a currency in a technology. It's not just a currency. It's not just a price. A lot of people have a stigma that, hey, the price, whatever it is, that's what creates a crypto. But in reality, that's not true. It's the technology with the economics that really builds that crypto. Okay. Now, there's a couple things you want to look for. Number one is incentives, rewards that people give, right? These are things like airdrops. At the end of the day, if you guys have not been a part of Tony's and Fernando's calls about Jupiter, put a 1 in the chat. Have you heard of the Jupiter airdrops? These are things that are happening all the time, and they serve the users. And that's a huge plus. So when you're looking at a crypto and you're looking like, hey, they actually have been able to give incentives. There's one project I'll talk about at the end. It's called Caspa. They only really have incentivized by mining and do other things. They only gone to the community. It hasn't really gone elsewhere, or even ICOs or anything like that. I think that's very key. Number two is a consensus mechanism, ways to agree on the current state of the blockchain, like voting and solving puzzles. You're going to have some cryptos like Uniswap, even Jupiter actually, that you can actually vote. If you own the asset and maybe you have to stake it or whatever it is, it gives you ownership of voting, participating in the market. And that is a big, big plus as well, because remember, you want to find a project that is not only providing something, but is providing for the people, because at the end of the day, that's what crypto is here for. And number three, we're going to talk about the next segment. It's tokenomics. the numbers behind it, maximum supply, how many coins are there, how many coins are needed even more to be created before it comes to maximum supply, right? These are things that are super, super important. And it honestly saves you because if you do not know the right tokenomics, you can be in a good asset that has good potential, but because of the numbers, it's not going to see the upside that you're looking for at the moment. And that's a true fact. We'll talk about that as well. Next one is game theory. Is study how people make decisions and interact within the project. That's very key as well. It's a lot deeper than just a couple of factors, but game theory is honestly a big one. Because remember, at the end of the day, this is all person versus person. Jordan Morgan talked about that a little bit on his story, but we'll go that for another day. And then the last one is governance. Now, what are the rules for making decisions and updating the blockchain? Asking yourself, how does a blockchain update? Is it through the users that can vote, right? And have that kind of right? That's a huge plus. If there isn't and it just updates because the CEO decides or the owner of the project decides, that cannot be such a good thing because it does not give the power to the people, meaning it might not be the best for the best usage of it. So make sure, guys, that crypto economics ensures that blockchain networks are secure, fair, and efficient. All right, I'm going to have Jean-Luc kind of give his 2 cents on this, and then we'll kind of continue.
Yes, sir. Yeah. No, this is very key. And so, for example, just to add for governance, that's basically giving power to the people. So let's say there's a gaming project. It could be Gala. It could be to do with the metaverse or Sandbox, Decentraland, any of those universes. It's like imagine owning a game, right? And you're owning tokens of that project, which is the game. Just for having tokens, you'll have the ability, depending on how many tokens you have, to vote on certain changes within that game just because you have a certain amount of tokens. Whereas if you just own that physical game, like FIFA or like NFL or NBA, whatever the game is, you can't, in this Web 2 world, you can't like have influence on that. I mean, what are you going to do? Email them and say, hey, I want to change this within the game. But in crypto, you can literally have those tokens, which gives you power to say, hey, I like this change. I don't like this change. So that voting capability is very important. And that's what crypto allows the everyday person to get into. It lowers the barrier of entry for individuals to get in, whereas in Web 2, there's a higher barrier to entry where the general public typically won't have a say. And then when it comes to tokenomics, I'm going to dive into that on the next slide. Amazing. So tokenomics, guys, what is that? That's simply the economics of a crypto. The same way how in stocks, you're going to look at certain metrics within Apple stock, within Google, within Amazon, whatever it is, you might be looking at the equity within that, or you might be looking at certain financial calculations within that. It's the same thing you're going to do in crypto. And so the difference is that it's going to be based on, let's say, token supply or distribution or utility. So starting off with token supply, that's simply the number of tokens available and also how and when new tokens are created. So anything with a limited supply, as we know, demand typically is going to be slightly higher and price may appreciate over time. Things with unlimited supply, anybody could have access to it. There's no scarcity involved, and typically demand is then lower. Now, market cap is a good sort of metric to understand with the size of the coin. It's not the most accurate, but it's what we typically use in crypto to determine how large or how small that project is. Distribution, how tokens are allocated to users, investors, and developers. This is very important. When I was in the Web3 NFT space, myself and a few others created an NFT project on the Solana blockchain in 2022. We had our white paper, and that white paper is giving you the details of how distribution is going to be gave to investors and early backers. It's going over the token supply. It's going over whether it has burning mechanisms. It's going over the utility. So in the white paper for these crypto projects, which is basically the business plan, you can think of it as like the traditional map, the timeline of how things are going to be run within the project. You will have a section for distribution. And that's important because think about it. if a project has, let's say, 80 or 90% of its distribution going back to the team, going back to the developers, the founders, well, then that means there's only 10 or 20% of the tokens going to the real investors. Well, that project probably isn't sustainable. You know, that might be a project which is a fraud or something which is just for hype, where they build up the momentum, the marketing's so great, they say they're going to do X, Y, Z, but when it comes to it, you didn't check the white paper. You don't realize that they're distributing most of the tokens back to the team. Do you get what I'm trying to say? So that's really important that you look into. And I'll share my screen real quick so you guys can have a little look at what it is I want to show you. A white paper is going to include many different things. And this is just an example of what it might include, right? It might include the community. It's going to include the team and advisors. It's going to include the early backers, the early investors. And so knowing the percentages of how much or where something's going is very, very key. I mean, let's just think about it. In the NFT space, how many times did we purchase a non-fungible token, a digital piece of art, and then later on we realized, hold on a minute, 90% of these NFTs are held by one investor. Well, hold on a minute. If 90% of a crypto project is held by one or two investors, put a 10 in the chat if you think that it's possible for that to be rug pulled. Put a 10 in the chat if you're like, hey, like that could be rug pulled. Like all the liquidity can go. Price can just drop out of nowhere because there's very few investors managing the majority of the supply. That's not healthy. That's not safe. It's the same thing in the crypto space. And this is why checking the white paper for these projects, if you want to dive deep, is something that's going to be very, very useful. I'm going to stop sharing and then we can go back to the PowerPoint. So that's key to understand. Utility. What does that mean? It's simply the use case of the token within the ecosystem. Every crypto project has a different use case. Now, if you're more of a beginner, I recommend that you just check out the layer one use cases. Layer one projects are typically the larger projects within crypto. They're typically the projects which have blockchains where smaller cryptos run within them, right? It's kind of like the layer ones is like the App Store or the Google Plays, and they have a bunch of apps, a bunch of layer two projects within that blockchain running in that system. So my recommendation is check out the layer one utility. Check out Polkadot, you know, check out maybe Matic, check out maybe whatever it is that's out there. There's so many various layer ones. And just to give you guys an example, there's a project called Ondo, O-N-D-O, and Ondo is actually a large project that is based in New York, and it simply securitizes US debt, right? US equities. So what that means is that it allows you to get involved in the US yield market through tokenization, through crypto. So that is an example of one project's utility, and you can search this up online and see that. Incentives. Gil touched on this already. Rewards for users who participate, support the network. That's when you can kind of go into like liquidity farming and liquidity providing. But to keep things basic, you know, let's just look at staking, for example, right? Earning compound interest on your tokens for simply holding the project. You can do that on Kraken. You can do that on various centralized exchanges. And it's just a little bonus, a little reward for holding that project. Let me give you a personal example, guys. There's a project called Kusama where I was earning around 12 to 15% on top of my investment every single month, which is great. Why? Because if Kusama went down in value as an investor, I was still getting that 12 to 15% return, even though it's falling in value. I hope that makes sense. 5 is burning mechanisms. Let's say like Ethereum. Ethereum has a mechanism within it called EIP 1559, which basically means as more Ethereum is extracted into the supply, there's the equivalent or similar amount of Ethereum burned in the back end to reduce that supply. So yes, Ethereum has an unlimited supply, but there's a deflationary mechanism in the back end, which effectively means that it creates some form of scarcity so that people would want to purchase more. So it's not completely unlimited. Burn mechanisms is something a little bit more advanced, but you may want to check that out when it comes to the projects that you're invested in.
Yeah, fam. This is basically a great breakdown of tokenomics. Now, put like a T in the chat for tokenomics if this makes sense to you. Now, a place that you can go to and actually use kind of looking at these things is going to be CoinGecko. So if you've been able to ever use CoinGecko, this is a place that you'll be able to actually come in and look at these things, right? It's kind of like the Yahoo Finance of stock market. Is you're going to be able to come on here on CoinGecko and look at these tokenomics, right? For example, if you go to Chainlink, right, it starts to kind of show you, not only does it show you the numbers and, when it comes to market cap, how much money is in the market, it talks about circulating supply, meaning how many coins are out there right now, but then it also talks about the max supply. So as an example, Chainlink is not at its max supply yet. So that means that there's still more coins to be created and mined to be out there and be given or be put in the markets. And that's very important to understand because you got to look at the numbers. Right now we're at a 9.2 billion market cap, right? I don't know exactly how they're releasing supply, but let's just say from today to tomorrow, instead of this amount of coins, it goes straight to the max supply. Let me know in the chat box. If this doesn't change, will it increase price or decrease price? If there's more coins in the market, but the amount of money stays the same, let me know in the chat box. Would that increase price or reduce price? Okay, I'm kind of good, you guys. Okay, amazing. Yes, the decrease. Why? Because the amount of money stays the same, but the amount of it grows. So there's certain assets I'm going to talk about here on today at the end when we talk about the plays and the tiers and stuff like that. But those are things to kind of look at. I mean, Chainlink is a great project. I mean, this is not going to move overnight, by the way, to 1 billion, but it's a market. It's a really huge utilized asset in many blockchains. Like literally, they're collaborating with a lot of things. They're collaborating with Ondo. They're already with Fidelity, with JP Morgan's blockchain that they're creating. They're doing so many things to be like the middleman. Think of Chainlink like the middleman, right? Without Chainlink, a lot of things don't really work efficiently and in now multiple blockchains. So you can kind of see that. You can also see the chains that it's in. Now it's in all the chains, which is insane. You can also see the categories, businesses, because they're really big with that. You can see they're a DeFi protocol, they're Oracle solution, they're a real world asset. You really start to see that they're a part of the Coinbase 50 index. So it's a big project that you can look like, which is huge. So that's just an example of what it looked like when it comes to tokenomics. And that's very, very key. I know somebody is kind of asking a question. When staking, is it true that we give up custody for the tokens? Yes. So think about it like this. When you're staking something, I mean, it's kind of like you're putting it in the bank and you're going for like the CD. I mean, you guys heard of like a CD, right? You basically letting them your money and they're giving you something for it. But in crypto, how it works is you're basically lending your crypto so that they can use it for maybe like certain like protocols have to have a certain amount of that crypto behind it, kind of like Uniswap, right? When you exchange Ethereum to USDC, there's got to be USDC and Ethereum that Uniswap has. So if you decide to stake or whatever they have for ETH, they get to use that ETH, right? Obviously, your ETH is still there at the end of the day, but you're basically using like kind of like your liquidity for what they're using in the marketplace. Now, it doesn't mean they're sending your ETH, okay? Just to make it make sense, they're basically just utilizing what you're giving them access to so that they can function the project and they're rewarding you as a user or as a provider, and things like an Aave, they do the same thing, stuff like that. But yeah, John Luke, if you want to add to that, you can.
Yeah, no, that's a good question. And so certain exchanges have different rules and regulations. So I'll give you guys an example. Many of you may not know, but put a 10 in the chat if you've heard of Celsius and put a 5 in the chat if you haven't heard of Celsius. This was a crypto exchange with Alex Mashinsky. So put a 10 in the chat if you've heard of Celsius and a 5 if you haven't. And so, okay, yeah, so Alex Mashinsky, he's a fraudster, I'm pretty sure he's going jail. I want to say it's like 10 to 15 years or something. But, he's like Sam Bankman-Fried, like they're both basically in the same category, right? And so For Celsius, individuals who had crypto accounts had title, meaning ownership, had custody of their funds within that project. Like that was in the rules, that was in the regulations for that exchange. With FTX had title and ownership of people's funds. So two different centralized exchanges, but two different laws for each one. So when it comes to staking, my understanding is that the ownership, the title of those coins do go to the exchange and they go away from you. So that's one thing that you do give up when you are staking. There's another advantage and disadvantage to kind of consider is that there's something called a lockup period when it comes to staking. A lockup period means that when you choose to stake your cryptos, like I'm staking Kusama on Kraken right now, I cannot take out Kusama freely whenever I want. I have to wait 7 days before I can take that Kusama unstaked and then invest it in another project or withdraw it into a bank account. So with Kusama on Kraken, there's a 7-day lockup period. What does that mean? Guys, that means that if there's an event, if a black swan event, which means an unexpected significant event happens in crypto, and I need to immediately take my Kusama out, I have to wait 7 days. So it's more illiquid. Liquid means I can move it, change it around whenever. Illiquid means that it's harder and it takes longer for me to freely move those funds. There was a project back in the day called Vespa. I wouldn't maybe recommend considering getting involved, but Vespa was a small cap project that I got involved in 2022. Well, guess what? The lockup period was 30 days. That means that I'm getting great compound interest. It was giving me back like 25%, 50% staking rewards, but it would take a whole month for me to take those funds out and move it around. So the lockup period is something you want to consider. Not all staking projects have a lockup period, but in order to move it, you have to unstake it and then move it around. Put a 10 in the chat if that makes sense.
Yeah, fact. So I know you're asking, is it risky too? It just depends on where you have it. You want to stay with the bigger ones. Like if you're staking it on an exchange, like Kraken, for example, it's like understanding it. Kraken's been here. I mean, nothing is for sure, but it's also, in my opinion, it just depends on your mindset on like how much you're holding it. So if you want to hold the asset for long term, staking is a good option, but also where you're staking it. I mean, I would recommend to stake it over an exchange on Exodus. Exodus is a decentralized wallet, right? So even though, yes, you're giving them access and they have it because you're staking it, it's a little bit more safe, in my opinion, than like an exchange, because exchange can go down, right? That's just an example. Now, also, I wouldn't recommend, in my opinion, it's up to you guys and what you guys want to do, but I have, for example, Solana, I'm staking on Exodus, but I also have Solana on my ledger that I'm not staking, right? Because it's just kind of how you diversify yourself. It's up to you. But at the same time, it's really just being smart. And if you're not familiar too much with staking and how it works, try a little bit. Just try, hey, I'm going to do $100 staking. The rest, I'm going to leave it out, see what happens, and then learn as you go, which is a big part of it, because at the end of the day, you got to try it to see what works and what doesn't work for you. But at the same time, you don't want to put everything on one basket, like saying, oh, I'm staking every coin that I have. I'm staking everything that I have, because at some point, if something happens, like John was saying, and there's a staking period, then you might be the liquidity. And by the time you get out, the markets were already maybe have moved. Now, the markets don't move that crazy like that anymore, to be honest. You have some time, but just know that, it's just very key to kind of look where you're staking it, how much you're staking, and why you're staking.
I'm not going to lie. That's a good point. Like, to think how long you actually want to hold that investment for. I think that's the most key determinant factor, because if you're looking at this project to get in and out within 2 months, why stake? There's really no point. But if you're looking to hold this for the next 6, 12 months, 24 months, or something like that, then staking may be a good option. Because, I mean, just think about it this way. Even when things turn to the bear market, as price is going down, you're still getting compound interest on staking. So you're actually earning rewards and tokens on top even though you're getting a depreciation in the asset. So yeah, the length of time you're looking to hold that investment is great. And let's be real, are we in alt season yet? Put a 10 in the chat if you think we are, and put a 5 if you think we're not in altcoin season yet. Put a 10 if you're like, yep, we're in altcoin season, and put a 5 if you're like, no, we're not there yet. Exactly. So the things they haven't really moved yet. So is there time to stake? 100,000,000% there is.
Facts. Yeah, I think that's a huge factor because a lot of people, you don't want to stake at the top. I've done that before, okay? I've done that myself. Like at the top is when I started to stake, but that was actually the top of the market, not the bottom. So that's a great understanding with that as well, which is really cool as to add to that. So, but yeah, I think the biggest thing now next is understanding real versus hype. What's real, what's hype in the markets, guys. Yes, there are things like meme coins you can invest with, and there's money to be made there. But you got to understand kind of your perspective with this, and also ask yourself, what do you want crypto to do for you? Do you want it to be a portfolio, or do you just want it to be something that it's more like a casino, right? You're coming in, you're doing your thing, you're seeing a meme coin, and you're taking your money to that, and if it goes up, you're winning. But if it doesn't, you lose it. Doesn't that sounds like a casino, doesn't it? Like put it one in chat. That sounds like a casino. You're putting your money somewhere. If it goes up, you're a millionaire. But if it goes down, you lose all of it. Interesting. Isn't that putting like a slot machine and going and then hitting the jackpot or not hitting the jackpot? I'm not saying it's a bad thing, but I'm just saying like really use common sense with things. And that's why there is diversification with portfolio, because on the next segment, we're going to talk about what to do with $1,000 in crypto. So what we wanted to do and bring up here, myself and Gianluca, to give our insights on what you could do, in our opinion, you don't have to take it, right? With $1,000. Again, it doesn't matter. It can be 100, it can be 500, but I feel like a lot of the times people know cryptos, people see the plays, but they have $1,000 and they're like, okay, what do I do? How much do I buy of this? How much do I buy of that? What percentage here? What percentage there? How many cryptos do I even buy? Like put a 5 in the chat. I have so many people ask me that question. How many cryptos can I have? How many cryptos should I have? Should I have 30 cryptos? Should I have 4 cryptos? Should I have 15? Should I have 100? Should I get in everything that Tony and Fernando and Gil and Jean-Luc talk about and everything that Max Terrell talks about? Like, what do I do, right? Myself and Jean-Luc asked that question the whole time, the last bull run. I definitely had way more cryptos than I should have had, in my opinion. And that's why I'm a lot more focused with a couple things. But the first thing you want to write down is the 3 categories or tiers to look for. Okay, 3 different categories or tiers to look for. Number 1 is main cap. Number 2 is mid cap. Number 3 is low cap. Now, on top of just being main cap, mid cap, low cap, I also have them as tier 1, tier 2, tier 3. The reason why I say this is this. Just because something is a main cap, in my opinion, it doesn't make it a 1 tier, a first tier. In my opinion, a first tier is it clicks all the boxes. Massive adoption. It's been here for years. It has a lot of liquidity. It has market cap. These are the bigger coins that are going to maybe see a 2, 3, 4x right now. They might not see the 100, the 50x that everybody wants right now. But remember, it's all about distributing your portfolio, because at the end of the day, guys, investing is about capital preservation. Warren Buffett talks about it, guys. It's not about making 100x every run. It's not about that, because realistically, nobody has been able to do that. There's nobody in history that's done 100x every run and never lost. No, but how you kind of manage that is you have capital preservation in the forefront, and over the years, you see that compound interest of 3, 4, 5, X, and then it goes from there, right? So that's tier 1. Tier 2 are like the mid cap coins. Main cap coins usually is over 1 billion. But again, there's going to be main cap coins that are over 1 billion market cap, and they're not first tier. They're not adoption. They're not really have a use case. They're really tough, like tier 4 or 5, right? So tier 1s, we'll talk about them. Mid cap is anything really below 1 billion market cap, but is also like a second tier, right? So these are certain projects that we'll talk about as well. And then low caps are really anything below, technically like 100 million. But I think right now, in my opinion, like anything under 1 billion, from my perspective, is actually a low cap, because as the money in the market goes up, these categories are going to change, because right now we have meme coins at 1 billion market cap. We have unutilized assets, like unutilized assets at a billion market cap, to be honest. So, in my opinion, these are going to be changing because when we have a $30 trillion crypto, like blockchain, like in the whole crypto, guys, 1 billion is going to be peanuts. It's going to be like this. So, just understanding that is very key. And that's why I like to talk about it as tier one, tier two, and tier three. And we're going to give you guys that as well. And kind of go from there. I don't know, John Luke, you want to add to anything to that before we talk about portfolio distribution?
No, I think we're all good.
Okay, cool.
Yeah.
But perfect. So now the second thing, fam, is portfolio distribution. This is just an example, and I like to be very visual. Everybody's different, but literally, this is me. This is my portfolio right here. This is how I have it distributed for me as how much percentage do I have in main cap, how many percentage do I have in mid cap, and how much percentage do I have in low cap. Now, as you guys can see, I'm not a higher risk, higher reward type of person, even though mid cap has potentials of 10x, and I'll show a couple of them here in a bit. But understanding that it's all about who you are, and is also your capital. If your capital is complete play money, meaning you can lose it all 100% and be like it's not even gonna sweat you, cool. Maybe you have a bigger low cap coin. But for me, my portfolio isn't for me. Like I'm not gonna take the wins of my portfolio and buy a car and buy this and buy that. I'm gonna take it, continue to compound it, go to stables, get back in. And my portfolio is for me the next 10, 15, 20, 50 years. It's like I'm going to be creating a portfolio for my daughter who's about to be born, right? She's not going to see it until she's like 18, 20, So that's my mindset with my portfolio. Now, everybody's different. And by the way, you can't have multiple portfolios. You can say, you know what? I'm going to have a high risk portfolio and I'm going to have a low risk portfolio because now you can navigate between the two if you want to navigate in that type of way. But this is just an example of how you can distribute your portfolio as well. Okay. And then the last thing, and I'll have John Luke touch on this, is here are the 3 tiers that you guys can start looking at. I would recommend to pick 2 in each category, meaning having 6 cryptos, guys, is okay. Mostly if this is your first run, like put a 1 in the chat if this is your first bull run. It's your first time in crypto, the first time seeing all-time highs, right? You're like, oh my God, it's my first time. Is 115K. Like, is this the top? Is this not the top, right? If this is your first run, in my opinion, the least cryptos, the better, actually. I'm going to repeat that again. The least cryptos, actually, the better. I'm saying if you just want to do one, you can. But realistically, the less you overstretch yourself, the more you're going to learn in this bull run and the more underwhelmed you're going to be. So you don't want to be overwhelmed. One thing that happened in the last run, and I don't know John Luke can agree to this, but to be honest, fam, there was nights I couldn't sleep because the markets, I was like, no, bro, like this was here, but now it's here. Like, what if I wake up tomorrow and then it's here, right? That is called over leveraged. Okay, fam, you should not do that. Right now, I sleep like a baby. I don't even think about my portfolio. I don't even look at my portfolio, to be honest, because I know. I'm like, hey, I'm not over leveraged. I'm good. And that's very key. And that's why we have this. And that's why I recommend not to have too many cryptos. And it's better to accumulate the ones that you enjoy the most than accumulating so many different assets. Okay. So under tier 1, guys, I have Ethereum, Solana, XRP. These are 3 of the biggest ones, right? These are the ones that are going to move regardless. I'm going to be honest, right? Ethereum still has so much potential. It's not even funny. It hasn't even hit all-time highs. It's the only one out of these 3 that hasn't even hit all-time highs. That's wild. Honestly, that's really wild, okay? Tier 2 is Chainlink, Ondo, Caspa, Aave. John Luke talked about Ondo. Honestly, every time I see Ondo, I'm like, bro, I'm like more excited about it because what it's doing is insane. The partnerships it's creating, the things it's doing. Again, these are things that you guys click. You can go on CoinGecko, look up the asset, look at what they're doing. But this is what I would put under my tier 2, okay? And then tier 3 is I have Jupiter and Radium because they're very similar in the Solana projects. Filecoin, ICP, and Helium. So these are the ones that can see higher upside, but also can maybe not see the higher upside. But these are very credible ones, in my opinion. They're going to see the upside. They're going to see they have huge utility. They have huge purpose. This is kind of what I like call the wild cards. Like if these move, these are going to be 10, 15. Some of these can be even be 20x, to be honest, depending on where things go, right? And then tier two, I think like a 5, 10x is reasonable. So, seeing Chainlink at 80, 90, 100 it's possible, 100%. Although it's a new coin, so like it's just going to create all-time highs. I can see Ondo going at minimum $3. Minimum, it's at 90 cents right now. Caspa has a huge utility. It might take a little bit more long term, but again, it's new. So it could see that, 3, 4, 5x. And in the first tier, you might see Solana. Solana can hit 500, in my opinion, right? At a top, at a peak. So that's 3, 4x. It's not crazy, but that's amazing. Like, guys, realizing stocks, 10%, 20%, 30% a year is like insane. So imagine you taking advantage of a 2, 3, 4x. Okay. I know we're so stimulated with so many X's, but okay, not that X, but the market's X's. But make sure, familia, to not be overstimulated with, oh my God, I want to catch the 100x coin. And don't think that's the only way to make money in crypto, right? So John-Luc, bro, I'll let you kind of touch in because this is kind of the last slide we have here for what to do with $1,000.
Yeah, definitely. I think the quote of the call is don't be overstimulated by too many X's. There's definitely something you don't want to do. Yeah, I mean, no, I agree with everything you said when it comes to the portfolio, how you manage it. There's so many factors to consider, guys. Number one, how much capital you have. Number two, what's your level of risk? Aggressive, moderate, or conservative. Number three, how new you are to the space. If it's your first run, you're going to operate differently than if it is your second run or your third run. When we say run, we mean in this cycle, like your first experience of, a Bitcoin going from a very low to a very high price. And so once you consider those three things, that's enough information to know how you're going to structure your portfolio. I was going to touch on a couple of projects, but I want to ask you guys a question. Put in the chat if you would like next week's call to be me and Gil going over 2 or 3 projects. Put a 10 in the chat if you're like, you know what? I see the projects on this page right now. Next week, maybe me and Gil can go over 3 or 4 projects in depth. How does that sound for you guys? See 10, 10. Yeah. Yeah, Gil, I think that would be great. Looks like we've got our call for next week ready.
Let's do it. Give the people what they want. I love that, fam. So with saying that, this is basically the end of today's call. Super happy and grateful you guys took the time and the effort to be on this on a Saturday morning or afternoon, depending where you're tuning in from. Guys, this is just, we're going to keep piling into this. Like John-Luc said, next week we'll pick, maybe 3 or 4 projects that we enjoy the most, and we'll break them down and go into them. And you guys can ask questions on it as well. I think that's going to be a huge part of these calls. But with saying that, I highly advise to invite somebody to this next call on next Saturday. Make sure to, tune in. We got some exciting things within Powerhouse as well for the ones that know. Some exciting things here there. Stay posted with everything. If you're in the university chat, guys, continue to use the calls. We got some exciting things for y'all to graduate to that next level. So continue to be plugged in. And for anybody who's a part of the exclusive members, just know we got something very exciting cooking up for every single one of us to take advantage of it. And if you're a guest on today's call and you got invited, you're in the channel and whatever it is, just know that here you're going to get a lot of education. Reach out to the person inviting you and say, hey, what about the Powers University? How can it be a part of exclusive membership? What's the next step? And we'll be able to guide you for what's next, fam. So with saying that, you guys have a great weekend, and I'll see you guys on next Saturdays. Peace.